Hi everyone, we're going to do a request from the community. CryptoTurtle asked on Twitter/X, please talk about the power of small percentages. I am trading 2 to 5% on a variety of different cryptos and just keep on recycling my money. This would help a lot of new traders for crypto and alts to understand. Thank you CryptoTurtle, let's dive in. Let's pop across to ctksnews.com. Just go to the Market Analysis tab and scroll down. What I've done here is to just put a calculator down here for you. If you had $500 and you wanted to turn it into $50,000, you can see that that is 100x because there's 2 more zeros after it. If you wanted to get a 10x on $500 to turn it into $5,000, you'll notice that 10x, it's the initial investment times 10. That's what 10x actually means. That's not your return on investment. Your return on investment is something different. But the concept is to get big percentages like these 10x type returns or even 100x type returns, we need a return on investment that's pretty big. But how do we get that if our returns are really small? The key to remember to get this 9,900% return, which is a 100x return, which by the way, just about everybody is looking for inside the stock market and other markets, especially crypto. You would need to have an annualized return of 9,900%. When people get into trading and investing, they get big return syndrome. They want these big numbers, but they don't realistically understand how percentages actually work. You can get very big percentage returns, annualized returns on investment by doing much better than that. I'll just show you. I'll give you an illustration of what I mean. Say you got 4.5% return on investment, and you would say, Ken, that's just shocking. But let's say that you just did that return in one day from November the 5th to November the 6th. Okay, let's just accept that. That looks pretty good. Now, what are we looking in terms of return on investment for that? We're looking at a little bit more than a 10x or 100x return, aren't we? But this is the problem with big return syndrome. It makes people blind to turning over small percentages to create incredible gains. You can see that that is a very large return, way better than a 100x return. But people simply don't understand this, yet professional traders live by this. You might say, Ken, that's too much, 4.5% just in a day, just keeping on rolling over that? Well, let's try 2.5%. It's still a big return on investment from an annualized ROI perspective. This means that you don't have to make big percentages to make big percentages. When you keep rolling your money over, time and time again, setting target rates of profitability on whatever percentage you like, whatever percentage that is, then you can just cash out when you hit that percentage, go back and reinvest at structural levels or between structural levels. But the key is you must know where the structure is to do this effectively. The truth is, the higher percentage return that you can pull on a daily basis, the higher the annualized return on investment. If you get up into the big percentages per day, you can do really well. But of course, they're much harder to get. You have to pick very volatile things to do that too. And risk cuts both ways. However, if you know where the structural levels are inside the charts, you can do this really quite easily because you can buy selectively. And when market conditions change, you change with the market conditions. CryptoTurtle was saying that they actually trade between 2% per day and around 5% per day. You can see that that is a really profitable strategy. If you're an investor and you're chasing the big percentages, maybe just take a small percentage of your investing funds and devote it into trading. You'll find that trading just teaches you so much about how to time the market. you'll find that you can actually buy and sell without any issues. These are just some sells from the start of November. You can see that there are a lot of them. I'm just turning over money at specified percentages, and we're not even down to the start of November just yet. That can give you a bit of an understanding how you can just churn and burn money all the time to make those kind of little percentage returns, but over time they absolutely mount up. There's a secret to knowing where to buy and where to sell. It's CTKS structure. And you can see I've been very focused in the crypto market. To make those returns, I use the CTKS method indicators from the service. One of the things that you will see, these are not normal support and resistance lines. They're very, very different. They're formed through the CTKS method, which marks up all of structural total price structure. This is very different from normal retail support and resistance lines that you will see. Because most people mark up a chart from just recent indicative price, they miss the vast percentage, there's that percentage again, of the price action. If you're only marking up 1% of price action, you're missing 99% of the signal. That's why the CTKS method is just the world's most powerful smart money buy and sell level detection system. We saw recently that Bitcoin was coming up. Where did it start to falter? Here at this structural resistance level at 35,185, and it didn't even make it up to the second structural resistance level at 35,298. What typically happens when you have overhead structural resistance, the price is pushed down. We know there are very simple rules when it comes to trading with the CTKS method. You know that price acts, structural levels act as safety nets. If it's not going down below that structural level, it's going back above to test the one above it. And that's exactly what happened. I mentioned this in yesterday's video. You can use this to your advantage because the alts follow Bitcoin's gravitational pull. Understanding the interdependencies between charts is really important when we look at total crypto market cap. And I'm just going to zoom in here for you just to show you what's happening right around this $1.281 trillion mark. What we're seeing right here is there's a structural support level at 1.277 trillion. We would expect price to come down here, retest this and resume up if the bulls are in control. If the bears gain control, this particular level will be lost and we will expect to head down to this 1.256 trillion. If we convert this one into support, we're heading back to this 1.29 trillion. That means that Bitcoin would be expected to break through that secondary level of resistance. When you know the structural levels, you can profit significantly from them. For example, Solana recently came into upward structural resistance levels and it caused it to fall down to a structural support level. We understand how these structural levels work. They're called SLs or Stanfield levels. These SLs are incredibly powerful. They represent incredible buying and selling opportunities. And people familiar with the CTKS method have been making quite a lot of money recently, because there's been so much structure inside the market that's worked towards our favor. Solana had a number of positive fresh air gaps, and of course positive fresh air gaps can turn into negative fresh air gaps as well, so we just layer in at different levels. With this kind of knowledge, you can turn those small percentages and make incredible returns, far better than the 100x's out there that people keep on chasing. And to get it, they need to wait a really long time. And by the time the top comes, they'll probably miss that. Because traders do timing. Traders always are seeking to understand where are structural levels failing and where is the safety net below price that will consolidate it around until it has a go at the structural resistance levels. And what we see on Solana is looking quite positive, but we know it's positive because we're looking at Bitcoin and total. This is another thing traders do that a lot of investors are not even aware of. The crypto market is really volatile, but we control the trade or investment, but the market controls the return. The market is simply moving one structural level to another. That's it. To get synchronized in with the market, and that's what you are paid on, your synchronization. You must understand what you will do if your position moves against you, goes nowhere, or moves for you. The strategy I have is really simple. When I see negative momentum developing inside the market, I'm just layered down. I want to catch it. We buy on red. When we get positive momentum inside the market, I set a target percent return that is reasonable between structural levels. And that's based on the interplay of the Tier 1, Tier 2 and Tier 3 charts. Then I just harvest the gains and reinvest. You'll find that it's absolutely stress-free when you know what you're doing. There are a lot of different resources at CTKS News under Market Analysis. Please make sure that you check them out. They're really helpful. I would like to share with you a comment that was made by Asim inside the CTKS Method service. Asim has done particularly well, and he's been able to pay off his medical school loan so he can start his residency debt-free with the knowledge he's obtained through the masterclass and the synchronization through the service. Knowing the structural levels is an absolute game changer. Asim goes on to say, not only that, but I have been able to sustain my family without my wife having to work and still have a very healthy cushion to carry me through the lean years as a resident. To become consistently profitable, you want to stack probabilities. It's so important, as Asim says here. To get into sync with the markets, it's very important to know where the structural levels are. And Asim says here, to comprehend objective dynamic market structure, that impact on price action gives you the confidence to place your buy and sell levels, staying in almost perfect sync with the market momentum. Congratulations again, Asim. That is just fantastic news, my friend. Returning back to the calculator, I just want to show you one thing, and I think it's an important thing to note. If you get a 10% return on investment from $500, you get $50 return. But I just wanted to put something out there as well. If when you sell that $550 to get that return, and then you put the same amount back in the market and you get another 10% return just on that initial 500. Don't worry about the stack probability, the extra 55. So just what actual return do you make? Well, it's pretty clear. It's another $50. So therefore, what you're actually seeing is that you've made a 20% return, not a 10% return. This is another trading secret that very, very few people know about. It's called trade recycling. Recycling your money like this is incredibly powerful. I'm a huge believer in it. The path to riches in trading and investing is not what most people think when they enter the financial markets. It's actually pretty much the opposite thing. Going slow to go fast is incredibly important. Everybody wants to become a Lambo owner as quickly as possible, especially in a bull market. But if you don't go slow, you'll lose that Lambo and your house at the same time. Starting small and scaling is the key. Buying on red, selling on green, of course at spot, is another key. I'll just give you a very quick analogy. A lot of people would be wanting to play tennis at the professional level because they see the number one, number two tennis players, they earn hundreds of millions of dollars. Take someone who's never played tennis before. They say, oh, there's a tennis racket. I'm going to pick that up and I'm going to be world number one. It kind of doesn't work like that. And that person may have said, oh, I saw some YouTube videos on how to hit the ball from these non-number one players in the world. So I'm just going to do that, but I'm just going to sit and watch as many videos as I can, and I won't get out on the court and actually hit the ball. Trading and investing is a really serious discipline. You need knowledge and you need emotional control. If fear guides your buy and sell decisions, you're already in trouble. I would suggest that you scale down. And please don't be in a hurry. Be in a hurry to get knowledge, but don't be in a hurry to make profit. But Ken, that's why I'm here. I want to make so much profit I buy a Lamborghini. That's fair enough, but the concept is just go slow to go fast. You'll move 100 times faster. I've been inside financial markets for nearly 4 decades. If somebody had have said these things to me right at the start of my career, trading and investing, wow, that would have been absolutely sensational. But no YouTube existed back then. And certainly the people who knew were not prepared to divulge any of these secrets. What I'm sharing with you has taken decade after decade after decade to develop, hone, and refine. I've put the time in so you don't need to. Have a great day or night ahead, my friends, and remember, go slow to go fast. Start small and scale. That's the key to success. Bye for now.